The recording. So everything looks good now. So again, good morning. I hope you had a good weekend. So let's review the market. Like I said, pretty interesting how the market closed on. Let me share the screen. You're right. Thank you. So pretty interesting how the market closed on Friday and now looks like it wants to follow through. So let's cover what we saw on Friday and why I engaged, both technically and as well mentally. So what we have as a market picture. First, last week was a pure nightmare. It was very choppy, going nowhere. But you know me now, I like to stay positive, optimistic. And what we had is if you take those highs from July, from September, we have a base right here that we retested. Yeah, 2 weeks ago on Friday, that was pretty nasty. But with that Monday gap up, we basically came back into the 21 DME structure, right into the base structure as well. So the market might have overreacted on that day, stabilized right into support. And for me, that's very, very important. When we get that pullback into support and we don't break down from there, then I assume that the market is supported and there's a continuation pattern in play. And that's what I went away last Friday and why I increased my exposure because um, Monday was still kind of the inside day and the reversal pivot that we tried to close above on Wednesday. We failed, and Friday with that closed was again above Monday's high and just above the 21 EMA. So we do have another price confirmation of a potential continuation higher on QQQE. We also have the oversold reading on the momentum, so the 5-day ratio. It fell on Wednesday, but that's very typical to build those higher lows and continue higher. We also had on Friday that McClellan summation hookup on the NASDAQ. Again, that's what I track. So McClellan oscillator green, so it means that the McClellan summation hooked up. We're still below the 10-day moving average, so need more confirmation, and that's why I call this setup my anticipation setup because we're just trying to get out support. We're just trying to turn the corner uh, on the breadth extension as well, but we need that confirmation of price breaking out of that range. We need that confirmation of McClellan reclaiming the 10 DMA. So that's why I still call this an anticipation setup and fully aware that it can fail. So again, I wrote about it last night on X in the Prime report. Oh, thank you, Matt, for that new version. All right, we're back. Um, so yeah, basically, the trading game is a probability game. That's an hedge that you apply over and over and over and over a large enough statistical population. You get on top and you make profits. So for me, I play the market cycles like you know me now. So for me, the market cycle is what we had Friday. So when I get that hedge, when I get that setup, I have to execute. Otherwise, I wouldn't call that my setup, right? So, but fully aware that the HUDs are there to work or not to work. And if it doesn't work, then I simply go back, reduce exposure, reduce my risk, and go back to my runners and wait for the next opportunity. So I'm fully aware of that, and that's the right mindset for a trader to see a setup, either a market setup or a stock setup, as being an edge with the probabilities that comes with it. So, um, what I want to see today is ideally today or tomorrow. I'm fully aware that we can jiggle around a bit and until that we break that structure, break Friday's low. This is still alive, but eventually we'll want to see bread come in the market, break out of that range of last week. So on the weekly, we do have an inside week, so we do want to break that to the upside. We want to see bread expand and the McClellan summation start to get into that uptrend above the 10 DMA once again. But we don't want to see Brett being too overbought, too extended right away. So uh, I like to see Brett trust that's constructive. But if we get overbought, then we will head into another problem that we have to de-risk too quickly because the market gets too overaided. So slowly but surely we want to get that uptrend to develop and yeah, just reconfirm that trend. Let me just switch to trading view. So all right, let's look at the market. So other thing that I'm watching are internals. So credit spreads. Again, we had that spike right into that overhead structure, and last week pretty constructive. We made lower highs, and lower highs, and same thing applies. We want to see that breakdown. We want to see Wednesday's low being broken, and start that downtrend below the 21 DMA structure. That's what we want to see. VIX, pretty constructive as well on Friday. So Thursday we had that pretty big structure breakout. That's always a concern, a sign of caution. Until we have that kind of breakdown like Friday. So this is very good action. We have basically that failed breakout now of that base structure. We're back in the 20-ish area for the VIX, and we have that VIX crush that usually precedes any new uptrend. So it basically creates space now for the VIX to start trending down and start that new uptrend. So that's very good news that we did have that VIX spike because that's what you want to see and have before any new uptrend. Bitcoin, so Bitcoin more lagging, but still constructive. So we had that recent low structure, right? So we had that Friday low, and Friday last week we made a new low. But what happened? And I remember I discussed that last week on Friday. Look for an undercut and rally. So what is an undercut and rally? Basically, when you get into support, you breach that support. So sellers try to push Bitcoin in that case below those lows, hoping for a breakdown and new downtrend. But instead, buyers are coming in, and now you have kind of a shakeout, a trap where sellers that tried to sell that breakdown are now trapped, have to cover above that base structure, and now buyers are rushing in as well, which create that momentum and that undercut and rally setup. So I'm not trading that. I'm still looking at the same thing as last week. We're still in a short-term downtrend below the declining 21 DME structure. And I want to see constructive action on the right side for a potential reclaim of the daily structure, or a reclaim right away and some kind of tight action as we backtest the daily structure. QQQE we discussed. Look at that beautiful base structure retest, those higher lows. We hold the daily structure as well. We have that daily reversal. So that's my setup right here, price-wise, confirmed by Brett. And NASDAQ, so we still have that bigger multi-month base breakout. That's kind of the first 21 DMA structure pullback since we had this in August, late summer. And yeah, still higher low on that base retest as well. So same thing that QQQE, higher low structure. We have that daily reversal pivot breakout on Friday, retest last night. And now we're trying to reclaim the entire 21 DME structure, so pretty constructive action. Let's now look at the portfolio. So first one, Super Micro SMCI. So that's the kind of name that does this. That's why, and the market does this a lot recently. So you buy into weakness, you buy into support, or you're left away. Stocks and setups tend to do that lately, is to just give you that weakness, and then the following day it gaps up and just leave you with a hard time chasing the setup, chasing the stock, and pretty hard to get position into it. So good gap up this morning on SMCI. Don't know if there was any news, but don't really matter. So likely I will try to get my 2R target this morning. But otherwise, we are basically confirming the undercut rally that I was playing right into the daily structure. So the goal is really to play that bigger stage one breakout on SMCI, and now we were trying to complete kind of a cup and handle. And yeah, let's see how it reacts to that gap up. But I would be pretty patient now, as long as we keep above the daily structure. Snow, I added this Friday. So so there was a good news on Thursday last week, but it was not able to follow through, and it was rejected right into that base structure. So we might have a nice failed breakout and retest setup where we made a higher low and pretty tight in the daily structure as well. So let's see if we can tighten up on the right side. I would still expect some sideway, maybe build that right side before I move higher. But unless we break Friday's low and we break that daily structure, it's all good for Snow. Nvidia still building higher lows. Right now we are right into that base structure. So fail breakout and not fail breakout, a breakout and retest. This needs to hold. We're kind of retesting the daily structure from below. Ideally, I want to see a push today, and if we're not pushing from here, but kind of close low in the low range, around Thursday's low in that area, then I will be out of that position because it's lagging a bit. So I will want to maybe reallocate in something fresher and new setup. But yeah, the setup is there. Strong uptrend on the left side after the April's low. Nice multi-month week month base. Breakout and retest setup. So I like NVIDIA, but it will have to prove itself. And then those runners, so nothing to do. Micron, so just making new highs after new highs. Trading the daily structure there. MP, there's a setup there. I didn't include that because it's a bit news related and I have my position and don't want to kind of overcommit on the name. But we have a breakout and retest setup. So we're retesting the daily structure, retesting the base structure as well. So you can look for a re-entry or an entry of Friday's high, which is the daily reversal pivot. Oak low, nothing to do, just flagging, and I'm trailing the daily structure on this as well. AMD still building higher lows, pretty strong action to be honest. And nothing to do, I'm trailing the daily structure on this one as well. VRT, note that earnings are Wednesday after close. So not a lot of time for earnings, but I do like the chart. Again, we have that big multi-month and year base breakout. We're pretty early in that new trend. I'm down to my runner, so I will go into earnings with what I have and not looking to add any new risk on that one. All right, so let's look at the focus list now. CRDO, pretty strong action on Friday. That's what an undercut and rally looks like. So we had that base, that range, that breakout, shakeout. We made an inside day, double inside day, and now Friday we confirmed the daily reversal and push right back into range. I'm not interested here because we are right against a declining daily structure. So two things to, so two ways to play this from here. Either that we kind of get that weakness that would allow us to retest that range structure. That would be a lot of weakness, but still within normal price action. Otherwise, I will look for a 21 DMA structure reclaim and backtest setup. So I'm not in a hurry to engage CRDO, especially on a gap up, but I will look for strength and weakness as we retest the either the structure that we have here or something like that, but I will look for weakness after the strength. Nebius, so clear leader recently, so you want to have your focus on those names. Or one to position. Sorry. But yeah, we're coming right into the daily structure. So I want to be patient. I'm not ready to engage quite yet. It's not actionable for me right now. But what I would like to see is kind of some weakness, some range in the daily structure on the right side to tighten up and create a better pattern than we have right now. Shop, pretty nice chart, big multi-week base. We're building that failed breakout and retest kind of shakeout setup. We have another reclaim and back test. So another higher low on the right side. I do like that chart, and I would look at Friday's high, so reversal pivot reclaim for an entry here on shop. PLTR continue to set up that cup and handle. It's getting close to be kind of too tight for too long. I like to have a, so I thought that handle was going to go, but came back with the market and now trying to make another higher low. So you can play the daily reversal. Like I said, it's getting a pretty long handle, so if it fails here, then I won't be interested anymore. But maybe last chance of that reversal pivot. Setup is still there, still leading a bit last week. So yeah, daily reversal for Palantir. CrowdStrike still building that cup and handle as well. Retest of early October, sorry, low. Right off the low of the daily structure, we have an inside day, so we have that daily reversal pivot to play that pullback structure. And finally, Dell, new name for me, but it's a pretty big chart. So we have that big base wedge breakout. We have that second base breakout here. So first pullback after making a new high. And I would play, and we have kind of a mini shakeout, micro undercut and rally setup as well. So I would look at this reversal pivot reclaim right off the daily structure for Dell as well. So that's about it for the Focuslist portfolio. So game plan for me, again, I shared that last night. But if the market setup is confirmed, then I'm looking to increase back my exposure. I want to be fully exposed. Ideally, I can de-risk some new names, so SMCI, for example. But otherwise, I'm only at 1.25% new exposure risk. So I'm open to increase that a bit, 1.5 to 2%, and play that market setup. So that's my goal early this week. So app. So same thing for me, app. I don't see the need to play this name. It's below a declining 21 DME structure, so unless we reclaim this right here, but there's also that SEC news. So there's so much stuff setting up right now that I don't see the point of being in a name with a news pending. ANET, yeah, I'm kind of worn out on that name. I can see the setup, higher low, 21 DME structure reclaim. But it's getting choppy on that base. A bit too choppy for me. Honestly, Monday was kind of out of the blue. Market was just doing an inside day and that thing flushed hard. So yeah, not interested anymore. VST, same thing. We covered that last week. I'm not interested of that group anymore, simply because it's so freaking choppy, especially on the right side. And you keep getting rejected at those highs. And that's the same thing for VST, for CEG, no, GEV, sorry. So we're getting that slap down each time we are trying to break out. Now GV trading below daily structure. So yeah, no, I'm just not seeing the group confirmation. Same thing for NRG. The only one that was looking good is CG, and yeah, that's definitely the leader, but it's too extended for an entry. So yeah, I would stay away from that group to be honest. At least for me, that's why you don't see those names in my focus list. STNE. So we have a structure retest. Sorry. So we have that little kind of structure here. So high low being made as well on Friday. So yeah, there's definitely a setup right here. On the daily structure reclaim. Yeah, definitely there's something here. And WBD. Yeah. So Warner Bros. So I wasn't there, right? We played that of this area. Uh, but there's still that news pending. There's a buyout pending on this name. So you won't see this name trend nicely. You won't see it uh, go up another 100%. If this buyout news came bad, then you're at risk of a gap down, and probably not much upside as well because valuation is kind of known, and there was some rumor as well on the buyout price. So not seeing the upside on WBD, I would stay away from this. So maybe last point. So if you don't have the exposure that you wanted to have this morning, and it has been going on for the last week, to be honest. But that's what we traded, right? So it was hard to get traction. It was hard to get exposure. Market was pretty thin, very very choppy. So now if we break out of that range, maybe we will have cleaner action, easier traction, better momentum, uh, and that should ease up the positioning process. So if you don't have the exposure that you wanted, please don't go crazy and open big exposure. Know the risk that you open, go step by step. So begin with maybe 0.5% of your account at risk, go up to one on 1, 2, 3 position maybe. If you start to gain traction, then you can de-risk those positions. Then if you have traction, you can use progressive exposure and go for something else. Uh, but always go in a controlled way, step by step, not being too aggressive, because we just don't know if the market will fail this setup, and then you don't want to take a big hit and go into a big drawdown. Why don't you trade biotech and pharma? Because I don't like that risk, and I don't need that risk. So biotech, especially clinical stage biotech company, have huge overnight risk, because they can release some news, and they can gap down 70-80% overnight. And yeah, I just don't like how they trade, the risk that are tied to them. And I like my basket of stocks. That's all I need. I have 50, 60 names, and I don't need more than that to trade well and have good performance. Remember, focus, focus, focus. That's my mantra. How many names do I need to build a 10 to 15 names portfolio? If I cannot find the names in my universe, in my 50, 60 names universe, then I'm doing a poor job to execute. IDXX. Oh, 1x too much. All right. Yeah. Yeah, that's a bit choppy, to be honest. Pretty low ATR as well. I wouldn't tie my capital to this name. I think there's better opportunity out there. Uh, yeah, I would stay away of ACHI. Um, that's wild. I don't like seeing wild price action like that. You want to trade tightness. You want to trade uh, in the 21 DMA structure, but not having kind of a 22% pullback within a day. Um, that's the kind of entry that I chase. That's what I traded. Uh, I want to see something orderly. I want to see some tight action on the right side. That's what I want to trade, not something that looks like this. That's very hard to manage risk, and not get shaken up uh, with that action. Aerospace. What's the ticker? No. What's the ETF for aerospace? ITA. Thank you. Oh yeah, it's definitely setting up. Uh, so first pullback since it broke out of that base. So that's a nice spot. A bit volatile, but you have to understand that this aerospace and defense uh, is kind of tied to many wars and the US China situation as well. So that probably induced a lot of volatility. Um, but yeah, it's setting up. We have that undercut and rally as well, kind of mini shakeout on the right side. Um, I would look at Friday's high retests for the ETF specifically. But yeah, when you see that kind of pull back into structure for the first time after a base breakout, then you can go and look at the leading stocks setting up. WDC too extended for me. That's past an entry. So the entry was here of that daily reversal right in the daily structure. STC, no earnings too close, and like you said, declining daily structure as well. Until that reclaims the daily structure, nothing there. Oh, STX. Okay, sorry. Yeah, earnings a bit close. You're right. But that's the same thing. I think we covered that one last week. I hate to see kind of those long uptrend with that climatic action. So that was clear climatic action right here. Very hard pullback, kind of 20% in 3 days. So yeah, I would let that digest longer, to be honest, just because there was this long run that ended with a climatic action. So I would be careful with this. I would wait for more basing action, basically. So earnings very close for this as well. But yeah, HWM, higher low on the right side. You can look at the daily reversal and basically we have that kind of cup and handle. So yeah, there's definitely a setup on this. All right, so that was good charts. Thank you guys for those requests. Is there any other questions, system trading related, before we end this session? Yeah, new TLab feature should be this week. All right, guys. So once again, have a good day. I will be in the trading pit if you need me. Oh, just before we go, last questions. So Jim is asking at some point if you can share thought on volume or why you don't use it. So a couple things, right? So um, I suggest I'll try to find it back, but I suggest there's a very nice video made by IBD, which was kind of volume is dirty or something like that. I don't remember the name. Um, but explaining that nowadays volume is less important than it was before, especially on breakouts because you have those dark pools and volume is a bit hidden. So yeah, less importance. And I found out that over time, over the years, that I didn't really have an edge with volume. I sometimes you see a big red day in a pullback structure like this one, for example, in VRT. Then it's set up. Oh, thank you. That's Mike Webster. Volume data is dirty, so use these chart. Thank you. So yeah, just found out that volume sometimes is there in the pullback structure, and it does set up pretty nicely just after and goes right away. So it was pretty uh, um, shoot and miss in my trading. Um, and what did I do? I tried to focus the more that I can. So the other thing important for me is to focus on only one thing, only a small basket of stocks, only on one thing only is price, how price moves around the 21 DMA structure. And for me, everything else is noise. And I truly believe that if you can reduce a lot of noise in your trading, you will have better performance. Very often you have a lot of indicators, you have a lot on your charts, and it just creates analysis by paralysis. So, uh, and how many times that I saw or received a question, hey, in that base, that volume is not relevant to you, or uh, myself just holding me back because there's a big volume in that base, only to see that stock goes up and start a new uptrend. So um, all that to say that for me, being focused is about being disciplined. And the more that I put on my chart, the less discipline I get. And I try to find many reasons for not taking a trade, for closing a trade, etc., etc. So over the years, my goal was to reduce everything on my charts and only keep what I trade and what my edge is. And that's the 21 DMA structure. I do use structure, so I like those swing highs, swing lows, those daily reversal, those base structure. Those I will continue to draw and to use because there's an edge for me there. But everything else goes out the window. So that's why I don't use volume, simply because it's not part of my hedge. All right. So have a good day, everyone. Uh, Trade well. Make sure to go in wisely. Don't overcome it. See how this gap up. So it's never a good idea to commit on a gap up anyway. So wait for the weakness, wait for the digestion intraday, and we'll have more information as if that gap is holding or it's fading, like we saw a lot of gap up fade last week. So take care, everyone. Have a good day. And if there's anything, I will be in the trading pit today. Take care. Bye bye.